All right, friends. Very good evening. Welcome to another live stream. It's been a while since I've been live, but I thought, given the circumstances that we saw today in the markets, it might be a good time to jump on here and just share with you some of my thoughts. Look together at the market, what's happening, where we're standing, and maybe find potential reasons of why what happened today, the reasons behind it, so we better understand. And then, of course, share with you my thoughts of what I'll be doing going forward, given those data that we've seen in the markets. And in the end, of course, as always, answer some of your questions. So feel free to pop them in the chat box down below. I'll get through as many as I can after I went through my part. So without further ado, let's jump right in. Have a look here into where we are standing. And when we look at the key market data over here, let me pull this out. We can really see, this column over here, it's today, and we see across the board basically a major drop. We've seen this probably in any social media app that you open today, on any newspaper. It sounds like the market is absolutely collapsing and tanking. And yes, it is definitely down, but guys, it's not all doom and gloom. We're talking about S&P 500 minus 2.55%. Now I get it, right? It's painful. Nobody likes to see red numbers, and it is a big drop in a single day. I get it. But it is not like the end of the world. We've seen way worse drops in recent past. So I think it's also important to keep things into perspective. Nobody was writing about it the last few weeks. Let me just open up the SPY over here. The last few months when we've been on an absolute, increasing streak. You can see year to date we're still up 9%, right? Traditionally we say the S&P grows by 8 to 10% per year over the last 30 years, year on year. So even with the recent dip, we're still up 9% for the year. And nobody was bothering to write about how great that was. But now that we see a little bit of a dip, it seems like the end of the world is near. So I think it's important to keep everything in perspective, obviously. Now, of course, we see technology being hammered a little bit more, down 3.2. All right, guys, I hope you can see me now again, because somehow something wrong with my internet over here, which is a bit unfortunate. Let me know if you can see me, drop me a comment. But yeah, hopefully everything works now. So yeah, where did I leave off? When we look at the various countries over here, we see all of them took a hit. Surprisingly, Japan recovered a little bit. We'll talk about this in a second. But yeah, as I said, across the board, definitely it's painful to see that happening. Same story for cryptocurrency. For those of you investing into crypto, myself included as well, we see here for the last 24 hours, major corrections. That's even more so than obviously the S&P, right? The S&P corrected, we saw 2 to 3%. Here, Bitcoin, that's recovered already a little bit. It was down even further. Now we're down 7.3%. I think at some stage it was more than 12% down in a single day. So honestly, yeah, I have a major position in Bitcoin that was really a hit. But funnily enough, even when we look at Ethereum, it's down even more, 10%. So you can see ultimately Bitcoin is definitely more stable. And interestingly enough, when we look into the crypto dominance, let me pull this up over here, global charts. So that's basically of the total crypto market, right? How much as a percentage is Bitcoin making up of that? And interestingly enough, if you can see that over here, back in 2022, Bitcoin was around 44%. So it was always the biggest currency by far, definitely. But over the time, it even dropped as low as 39%. But now you can see it really made a comeback, and now we're at 55%, meaning of all the cryptocurrencies out there in existence, Bitcoin makes up 55% of the total value. So really interesting to see. It just shows basically to me that in times of uncertainty and doubt and potential fears of recession, people are investing out of those more risky assets and then really see a safe haven in Bitcoin, which I do as well, and that's why that's my only crypto investments that I have. But let's look into what is one of the biggest potential factors why we have seen such a major drop. And honestly, it's not actually such a big thing, right? Once again, of course, it always comes back to the US. They usually lead the way forward in good and bad things as well. And you can see that the job growth totals was only 114,000 in July, so less than expected. So as you can see over here, it's still a positive number, right? Job market still grew, but it's less than expectation. So that's the monthly job creations in the US, and those numbers came out last Friday. And then obviously the stock prices were closed, right? So that's why we didn't see the reflection of that on Friday. But now when they opened today, that has been reflected in the data. So that was one of the factors affecting that drop. In addition to, of course, we have heard last week from the Fed as well in the US that they are planning to keep the interest rates for the time being at least stable. So, some people were hoping for drops to come in, because a drop in the interest rates would definitely stimulate the markets, because less people would save their money in the banks and instead invest it into alternative assets, right? Most likely in the stock market or crypto markets or real estate markets, and that would lead to usually higher demand and prices in those markets. We haven't seen that, so they kept the prices very much, the interest rates very much stable, which is unfortunate, but at the same time, I'll come to this in a second, that also gives me hope that they have an answer to solve that recent drop that we have seen. So you can see the US unemployment rate definitely, at 4.3%. Yes, it increased a little bit, but you can see back here, obviously, we know what happened there, but it has been significantly higher. So, we're not talking about, crazy numbers. It's minor deviations from expectations. So it's really nothing majorly bad happened, but those small things, they do add up. And then obviously some markets overreact, they price it in, and the result we've seen today. But personally, I'm really not too bothered about this, because I think it's just a little correction, because fundamentally nothing has changed substantially, right? Yes, we've seen obviously the situation in Israel is another factor that could factor in, but it's not a global shutdown like we've seen 3-4 years ago. It's not some major country that's completely dropped the GDP output. So it's small factors that impact. So that's why I think it's also very temporary resetting of the price. We've seen here the VIX is an interesting number. It's basically the volatility in the S&P 500. So obviously the higher the volatility, the more trading has been going on. And that has really spiked because a lot of people, fearing that the drop will continue, the recession is about to start. So they're pulling out their money from the funds, wherever they invested in. And honestly, I always say that's probably the worst time you want to be selling. Yes, it could drop further, but at the same time, if you sell now, you materialize your loss if you made any, right? If you've been holding on for number of years, and probably you made a profit. But if you sell now, you actually materialize the drop. If you hold on to it, and we see this time and time again, just a quick reflection on the S&P over here. We've seen all the drops and resets in price all along. But if you just held on to it over time, you've been doing extremely well. And I think we're going to see exactly the same over here. Of course, another factor that started in the morning was the situation we've seen over in Japan with the Nikkei and the Topix index, which really dropped massively. There have been a couple of factors. Again, I'm not an expert on the Japanese markets, but apparently a thing like a carry trade, they call the carry trade, where they essentially trade two different currencies. They use one currency with a lower interest and then invest it into a currency with a higher interest to kind of make that arbitrage money. So it makes usual financial sense, but at some stage, if the currency pairing and the valuation sort of changes over time, people are getting nervous. They might be losing money potentially. Then they're forced to sell one currency over the other, and that can lead to a sort of market correction in a fast way, or as we've seen over here, almost a market crash. And obviously they start the day in the morning. So when Europe woke up, they already saw those numbers combined with the job numbers in the US on the Friday before. So all of those factors together, I believe, led to the major repricing we've seen. But once again, guys, I want you to not freak out, because yes, while it's painful over here, we see the S&P down 2.8%. It's not the end of the world. We've seen days, I think, well over 6-7% in the past. So it's really nothing to freak out. If, of course, this continues for the next, few days or 2 weeks, what have you, sure, it's a different question. But right now, I think really it's important to also calm down, not get, all carried away in that frenzy over there. Interesting enough, I don't know if he's really has this crystal ball to see what's happening, but not so long ago, I read on the weekend, Warren Buffett selling almost half of his holding in Apple. I sold my holding in Apple a couple of weeks before that, so I don't know if I triggered him to sell his share, but obviously that was one of his most profitable investments he ever made over the time, and he sold it not so long ago. So now, of course, people say maybe he knew more than us, and well, most certainly he does, right? He's a legendary investor, but I think that was yet another factor in that entire equation of people freaking out. If he sells such a big share, and we're talking a massive, I don't think they write here, the value was valued at 84 billion, his holding, right, in that company. So selling that It was a massive amount of money that he was selling. So obviously, once again, it's yet another factor for people to sort of get nervous about the entire situation, and all compounded together. So once again, there's not one single reason why it was triggered, but it happened what happened. And I think it's very important to stay calm, cool, and collected. And actually, what I did today, I bought some more S&P 500 because I got a discount, right? When I look at the price today, I was very happy to scoop it up at a lower price than I would normally buy it for, right? And the same, I bought a little bit of crypto. Sadly, I'm not sitting on too much cash right now, as I need it for other reasons, for the real estate, apartment, and so forth. But if I had more, I would definitely be buying more Bitcoin right now. I think it's a really great opportunity to get in because, once again, as a long-term investor, I'm really bullish about this, and I see this well over 100K, 200K in the coming years. So right now is actually a really good buying opportunity, and that's what people forget, right? They freak out, they sell, they lock in the loss instead of seeing these as buying opportunities. Now, I'm saying if you talk about assets that really have long-term value, right? I personally wouldn't be buying, any of these hot meme stocks, what we have over here. I mean, well, I mean, you can think of a lot, but even, let's say, Intel, right? Intel, a big company that has been doing tremendously well over the years, but you can see, year to date, since the beginning of this year, down 60%, right? So that would not be a company that I want to be investing in right now, even though obviously you could say it's cheaply priced, but I actually see a lot of warning signs with Intel. I think they really missed the boat over there, and I wouldn't be betting on Intel going forward. So what I say is, when you want a dollar cost average, meaning invest in high prices and low prices, because you don't know what the market price is going to be in the future. And even now, right, you don't want to be deploying all your money into the market. Yes, while I bought a little bit more today in the S&P 500, I'm not going to use all my cash available to go all in, because, as I said, right, maybe next week, let me pull up the full screen over here. Maybe next week, the market will continue to drop and I'll be missing out. I'll be wishing, oh my God, if only I had more cash, I could buy even more, right? So you still want to be disciplined in your investing style. If you dollar cost average, as I do myself, I buy every single week. You don't want to completely go all in now just because you see the price dropping a little bit. Now, in my case, I did buy a little bit more than I usually buy. But as I said, I still want to have cash on the sidelines in case it continues to drop. So then next week I can buy again a little bit more and get a bit more bang for my buck, so to say. And yeah, I think that's something really important. But I just want to urge you guys, news can be really sometimes a little bit, how can I say, making your investing life a little bit harder, right? We're talking about investing for 5, 10, 15 years. And everybody says, I'm a long-term investor. I understand compound interest. I want to invest for the long term. That's great to say it on the one hand side. That's theory. But in reality, I see a lot of investors panicking, getting nervous. They read all these articles. They see the YouTubers with all their grumpy faces saying the recession is here, sell now, you're going to be losing everything. And I think that's just obviously good for them, for clicks, right? I get it. But in reality, these things happen all along. I mean, the S&P 500 survived world wars, right? We've seen pandemics, we've seen so many things, and yet over the long term, those people who held on to it in the long run always made money, right? So just want to urge you to read a little bit less news. Obviously, you can't ignore it. The world is happening out there. Nobody knows what's going to be the future. Could it continue to go down a little bit? Yeah, it could be. I would be surprised if it didn't. I think a couple of days there might be still a little bit of a repricing, but I really wouldn't call it a recession. At least I can't see right now the major signs that show me, the end is here. We talked about that at the beginning of this year. Everybody said, recession is coming, recession is coming. Well, it didn't actually come. And one thing to keep in mind, as I alluded to before, the fact that the Fed still hasn't lowered the interest rates, while the ECB in Europe has done so. The UK central bank certainly has done so recently as well. So a lot of the banks already started lowering the rates, except for the Fed. And let's be honest, the Fed is the most powerful of all those central banks. So once they start lowering the rates, even by 0.25 basis points, that will send huge impulse and positive signals to the market. And I think that will immediately bring up the stock prices, renew the confidence in the stock markets, in the crypto markets, real estate markets. Really, I mean, we're talking about more small things that have major impact. And so personally, I'm really not worried. I also don't want you to stress out about it. As I said, if we continue to see these things really sliding down and other major macroeconomic factors following accordingly, then we can talk about it maybe a bit more seriously. But right now, I think just take it with a grain of salt. I'm quite bullish about it. I'm trying to take care and advantage of these buying opportunities and not get the news, let the news get to me. Right, with this, let's jump into a couple of your questions here. Jorge, I hope I pronounced it correctly, from Portugal. Nice to see you. Alejandro from Spain. Cool to see you. Derek, hi from Italy. From Greece as well, Manon. Super cool. Very nice. Success and go. Only 25K down. Yeah, well, mate. Sorry, by the way, I have to pull it up, the question, so you can see that. Yeah, mate, I didn't actually open my Ledger Live wallet today because that would be very painful. I thought I'm just going to leave it closed. I just followed the Bitcoin price, but probably it would be in a similar range like you. So, but again, guys, it's just a number, right? Some people said, oh, you lost a lot of money. They wrote to me. I mean, first of all, how you even think to write that to somebody like you lost money today is almost like you feel happy about that. But anyway, that just shows certain people's character. But once again, guys, if you don't sell it, you still have the same amount of assets that you previously held, right? It just means that the temporary market value of that asset is a bit lower than maybe it was yesterday. That's all there is to it. But you still hold the same amount. Only if I was to sell it now, would I be losing technically, right? And that assumes that I didn't make profit before. So it doesn't mean because I sell at 3% that I still lost on its entire trade. But just, the same with real estate, right? Because just because somebody buys a house and then it goes through a market cycle, we've seen that all before, a recession, difficult times, interest rates go up, the price for houses go down. That happens, right? It doesn't mean the house all of a sudden is less valuable. Just hold on to it. A couple of years down the road, if you bought in a good neighborhood, it will naturally regain in value. So that's just so common practice. But once again, I mean, every time this happens, people keep on freaking out. But I guess that's just human. From Slovenia as well. I mean, really cool to see you guys all over the place. Very, very nice. Nuno from Portugal. How are you, mate? Pretty much all crypto did go through a major drop lately. Absolutely. I mean, and I think it will continue to, right? And also people forget sometimes, they freak out when Bitcoin goes down by, I don't know, as it did today. I think at most it was 12 or 13% down for the day. Obviously it is a more volatile asset, right? But volatility goes both ways. Well, everybody likes to see the upward price, which, if you invest in a long position, you can also take a short position where you bet on prices going down. But I assume most of you watching, myself included, we betting on long prices, meaning the price goes up over time. And obviously, the volatility usually goes up more proportionally than the S&P 500, right? But at the same time, it can also drop proportionately more than the S&P. It's just a more volatile asset, and volatility goes both ways. But that's why I'm also not too worried. I know that it dropped more now, but I'm also sure that once the markets recover, it will also recover more than the S&P recovered. So again, if you can't stomach the volatility, then maybe it's not the right asset class for you. I spoke about this with my mom. She called me, why the prices are down today? I said, Mom, don't worry. That's normal. Then maybe you want to invest more into the S&P, which remains more stable, up and down both ways. But of course, with cryptocurrency long term, I think we have a stronger upside potential. But of course, there will be downside corrections along the way, for sure. What else we have here? Short the VIX, my friends. Yeah, I mean, people shorting, right? You can bet against the market, or you bet on falling prices. You can do that. So you basically make money when the prices fall. And a lot of people make that and make money. For me, it's a little bit riskier because if they don't fall, they can rise endlessly, basically. And you can really there's something we call a short squeeze. You can lose like infinite amount of money, while if you invest on a long position, meaning on prices going up, the worst you can lose is all your money, right? It goes to zero. But on a short, if you take a short position and the price continues to climb, 5,000%, let's say, you can really lose like infinite amount of money, technically, theoretically. But of course, there's certain ways to protect yourself and so forth. But yeah, I'm not into shorting, but I know some people making really good money with this, obviously. Osama, pleasure to see you live, man. Great to have you here. You're the reason why I feel confident trading 212. Nice to hear that, mate. I'm not a spokesperson for any of the brokers, but obviously I share my honest opinion about those and really recommend only tools that I use myself. I'm being pitched by a lot of brokers and exchanges all the time, which would be profitable if I, review all of them and give you my affiliate links. But I believe in really being, truthful and honest. And if that comes at the expense of maybe not making as much money, then I'm fine for it. But at least I keep my credibility. And yeah, I also have a lot of my money kept with Trading 212, so I can definitely confidently recommend them. What do you think about AMD? Good question. Let me pull them up because I don't know where they are right now. I'm not invested in them as I obviously stopped in general investing into individual shares. But the year-to-date performance down 8.6%. We see that over here for the year, still up 21%. Look, I mean, obviously, chips are being really much pushed by the US. You can see some of the analysis here on Seeking Alpha, strong buys and so forth. But again, analysts are just that, right? They're sharing their own professional opinion. There's a big short interest position, so 2.85%. I would consider quite a high percentage of people betting against the price appreciation of AMD, so meaning quite a few people betting towards the price falling. So I don't know, I would probably have to do a bit more research. If I had to buy a chip company right now, I would probably go with the market leader, Nvidia, right now, even though I think they're also overvalued. But once again, guys, that's why I find it so hard to find the winning horse. Let me just pull up how they compared versus the S&P 500. One second. Over the last 10 years, well, okay, that's actually not bad. So if you got in time early, you see the returns over a 10-year period are still significantly better. Over a 1-year period, neck to neck, right? So I don't know. I think probably one of the better stocks, if I look at some other ones like Coca-Cola or these classical dividend stocks from tech stocks, definitely one of the better ones. Had to do some research, but that's the beauty of investing into S&P 500, right? I don't have to worry too much about which company to invest in. I benefit either way, and I will continue doing just that. Stefan from Macedonia, very cool, very nice. Welcome to the channel. Do you believe Freedom 24 is a scam? Do you know the owner from Kazakhstan? Look, I mean, every video I make, I'm probably at least once I'm being asked about Freedom 24. Maybe one day I should do a proper review about them. I'm not using them myself. I can't call them a scam. I would think that's a little bit hard. I do have my thoughts just by looking at the websites. As you said, also I look at the ownership, which does look a little bit... yeah, I mean, for me, not super convincing, let's put it this way. I think they do some things quite good. What I don't like is their fee structure. They're charging me for withdrawing my own funds. In general, the fees are quite high. So yeah, right now, I wouldn't be using them as I already have so many other great options. But calling it a scam, probably I wouldn't say that. But yeah, maybe a good topic for a separate video one day. Don't you own any Ethereum or altcoins? Jacob is asking. I did, and I think, when did I sell that? I think at the beginning of this year I sold it, and a lot of people said, oh Guy, you're stupid selling Ethereum before the Ethereum ETF. And look guys, I mean, as I said, nobody knows the future, right? I was expecting that the ETF would be coming on board, but at the same time I knew it wouldn't completely rock the boat. I've seen the same with the Bitcoin, right? When Bitcoin got the ETF approved, it didn't like double in value, and I just understand Bitcoin much better. And looking at the charts I've just shown you now with the Bitcoin dominance, yes, maybe the returns long term will not be as high as some altcoins, but at the same time, I know what I have. I have an asset I feel very confident in and that I will still invest in, even if it drops, we've seen today, by 12, 13% in a day. Honestly, I wouldn't be doing this in an altcoin that I read somewhere on Twitter or somebody in some, Telegram group said to buy. I wouldn't have that conviction, and you need to have the conviction. If you don't have the conviction, that's when we have situations like today where people freak out and say, oh my God, should I be selling or what? If you genuinely believe in the asset that you invest in, you wouldn't be selling, right? I mean, so that's why I sold them, because I didn't have the conviction. I understood Ethereum, but not to the extent that I understood Bitcoin. And I think I also made a video about this at the time. So I don't have any more altcoins or Ethereum. I'm really a Bitcoin maximalist, you could say. Dafidu, I hope I pronounced it correctly, mate. Best time to invest in big technology stocks. I mean, they've done very well for the last years, really. And obviously we have seen now a little bit of repricing. So why not, right? I mean, just because Warren Buffett sold out of Apple, it doesn't mean that the tech stock is over. I think it's still pulling the overall markets. I think now 40% of the S&P 500 is made up of tech stocks. So definitely we will feel it either way, right? If they're dropping, it will be reflected in the overall markets. And if they continue to gain, as they've done already the whole year, we'll all benefit. So yeah, I suppose long-term, definitely you can't really go wrong with tech stock. It's just a question of which company to invest in. We said before, is it going to be AMD? Is it going to be NVIDIA? Is it a new up-and-coming chip manufacturer? Who knows? Andrew, nice to see you. How does the Fed move to cut interest rates and how quickly? Yeah, so I just mentioned that before in when I shared the article. So I think it was I can't say smart decision. People were expecting that the Fed would not cut their rates in the last meeting. But now I think the pressure is on, especially with the situation we've seen in the markets, that they have to do something. They can't just continue to sit idly on their hands doing nothing. That worked for a while, but I think now they actually need to action that and start cutting at least a very minimal 0.25% basis points. I don't think they're going to cut 0.5%. I think it's going to be similar like the ECB did, same as the UK central bank did. So I think just to send a positive signal to the market, hopefully either August, but I think in September meeting, they will announce that. If they don't, I think that will definitely continue to scare market participants that it might be same for longer, even potentially into next year. And that might have really some repercussions in major market repricing. So I think, I really think now there's so much growing pressure on the Fed to correct the market position, especially if the other job data and so further market data that we're seeing is not coming in line that we were hoping for, or analysts are hoping for. I think the Fed has to start cutting the rates in order to really stabilize the markets. But who knows? Look, nobody knows the answer. But personally, I think we're going to see a cut this year. Is it going to be August, September? I'm not sure, but I think it's going to be definitely happening eventually. Osama, residing in Italy. Could you please tell how old you were when you first time started investing in stocks and what was your occupation? Good question. The first time, I don't even know. I started dabbling around, but really without any mission, just randomly gambling. In a way, I would really call it gambling because I read something about online, a stock you should buy. And I think it was at the time, probably, 23, 24. Bought it through my local bank, which was such a pain. I remember still, they charged me, I think I bought my first stock, 50 euros. And they charged me 10 euro commission, which is absolutely bonkers, really. It was a flat commission. So yeah, that was crazy. I don't remember, to be honest, what it was at the time. Maybe it might have been Apple or Microsoft. Then, I was holding on to it a couple of days. I started seeing a drop like we see today. I panicked. I sold it. Again, they charged me 10 euros commission. So it was really a bad experience. And then I didn't touch stocks for quite a while, actually. And then my first major investment was actually my real estate that I bought, which is also now, I think, what is that? The first time I bought it, probably 13 or 12 years ago. And yeah, at the time I was working in hospitality. I used to be a luxury hotel general manager. I was working in a 5-star hotel company, international company, and moving around different places. Used to live in Switzerland, in Beijing, in Dubai, now in Lithuania. So yeah, moved all around the world a little bit, and obviously could save quite a bit of money. That allowed me to buy real estate. And then only after that, I started discovering other asset classes, because obviously real estate is very capital intensive and it takes a while to save up. And I thought, while I'm saving up for potentially the next apartment, what I can do else with my money. And I started, getting interested in individual stocks, dividend stocks, later on added cryptocurrency as well. And now very much into ETF investing. So yeah, that's kind of my journey there. Nvidia is not overpriced. I think it's very cheap. Well, listen, I'm not going to argue with you. That's totally fine. I think eventually, time will tell. I'm personally not investing in individual shares, but yeah, I wouldn't be surprised if it continues to grow. Definitely. Ignace, hope you're okay. Love what you do. Appreciate that, mate. Thank you very much. Do you mind me booking a call? I start my journey as an influencer, talking about finance, day trading. Would be cool to catch up. Absolutely, mate. I mean, feel free. In case you're not aware, I do offer one-on-one consultations. So you can book a call with me, 30 minutes or 60 minutes. You should be able to find the link in the description below. And yeah, happy to talk to you guys, chat with you about career advice, YouTube, influencing, whatever it is. Happy to help where I can. Um, did you totally stop investing in individual stocks? Yes. Not sure. Maybe you can rewatch some of my latest. I think the last 2 videos I talked about this, where I sold my last. I still have one last individual share, which is Pfizer. I can't wait to get rid of that one as well. And once that is sold, I'm really only into S&P 500 ETF, my Bitcoin holding, and real estate. So really try to simplify it as much, because I want to dedicate my time towards revenue generating activities, right? Like, how can I grow my income? Because the more income I have, then I can invest into more conservative things. Only if you have very little income, then you have to take higher risk, right? Because then, if let's say, and we've all been there. I started, right, investing, I don't know, 50 euros a month, 100 euros a month, right? Then obviously 8% return on that in a year is really not much on, you can do the math. It's very little. So then of course you want to have higher, more risky assets to invest in to get a higher return, to, have some substantial returns. But if you invest, a larger amount because you earn more, then you can afford to take less risky bets. At least that's my view. And I don't have to have sleepless nights. As I said, right now I woke up, I see everything in red, everybody panicking. I was very cool because I don't need the money right now, so I didn't have to sell it. And I know I invested into solid assets, right? It's not an individual company that I invest in. Maybe there was some big disaster going on, prices dropping, the company is about to go bust, what have you. So many things that can affect the company's price that I can't control, right? It's beyond my control. And I don't have inside information. So how can I assume that I can outsmart the market? And that's why I made the pivot to ETF investing. And that works for me. But hey, ultimately you have to find what is best for you. Read this, Linkeme. Likewise, sadly, my Lithuanian is not the best, even though I lived here for many years. So sorry for that. Hopefully, I will get on to that subject as well to improve it. But for now, I have a few basic understandings of Lithuanian language. Yeah, Palantir earnings later today. We'll see some green. Who knows? I guess even if they do perform well, which I'm sure they will in terms of financial results, it's such a funny situation that when the market is down, it seems everything is down, right? So even if they do end up technically deserving to have their stock price appreciating, just because the overall market sentiment is down, people are selling either way, and they might actually still result in a red number, which is not always fair. But hey, that's how the stock market works. Again, I'm not personally invested into Palantir. But I think it's a great company. They have strong potential in the future. So hopefully, if you're a shareholder, you will see some green numbers over there. PZ, hi guys, is it worth holding on to my stocks that are down a lot? Bitcoin, a good time to buy more dip? Yeah, definitely. Look, I mean, I don't know what you're investing in specifically. If there are solid companies that you feel comfortable with, and once again have conviction in, that you can hold on to them for the long term, not just some meme stocks like this cinema company and so forth, stocks without really fundamental value, then I would probably be selling. But if you invest in companies that you research, you really understand, you see long-term revenue growth potential, that's important, right? The revenue growth and profitability, that has to be there. We've seen in the past companies that only focused on revenue, but once things go south, they don't have profits. And if you don't have profits, I mean, I'm sorry, you can't sustain the operations for long term. Then it's going to be starting the company, payroll reduction, things going to go down, and eventually the share price is going to follow accordingly. So if you invest in companies that you really believe in, has long-term revenue growth and profit growth, I think definitely hold on to it. As I said, I think it's a temporary repricing of the market, but I don't see any major collapse of the market or recession, even though YouTube wants you to believe and Instagram influencers wants you to believe that's happening. But I personally don't. But again, I may be wrong, but that's just my own humble opinion. And in terms of Bitcoin, yes, as I said, I also bought some more. I think it's a great buying opportunity. There's actually, I can pull you one chart, which is quite interesting. You can have a look, is the Bitcoin rainbow chart, which has a lot of data and so forth going into this. But for 2024, let me see this over here. It kind of shows you on which price point we're on the journey right now. And you can see over here. So basically with a recent drop over here, we're now what they call basically a fire sale. So we really priced near the bottom of where it should be given the normal cycle evolution. So yeah, something interesting to have a look. It's called from the blockchaincenter.net. You will see the rainbow chart. You can have a look at it. But yeah, as per them, it's definitely a good time to load the boat with some more Bitcoin in case you are interested in holding that. Right, a couple more questions coming up on the hour. What do we have? Can you check the S&P 500 ticker symbol SPYL? Yeah, I mean, I think I've shown before the S&P performance, definitely down for the day, but again, long term is going to be in a good position. Might be same as Meta, I guess. Great earnings, but still down. Yeah, absolutely. And again, as I said, that's just market sentiment, right? Right now, you can have strong performance. Ultimately, if the market drops due to reasons beyond the company's control, it's just going to be a temporary drop in price. But that's the exact word. It's temporary. So don't get bogged down on that. Be focused on the long term. Janice, I think many dividend companies like Stellantis, Pfizer, Volkswagen are very good propositions, especially in very unstable. Absolutely. I think, I was also a very strong dividend investor. I really enjoyed it. I did a lot of videos about this. And especially, I think in difficult times, that's when dividend investing really shines and people sort of resort back to it, because usually they are very stable companies, right? They don't have really high growth, but they're stable, right? Coca-Cola, those companies, they don't disappear overnight, but they're also not going to grow crazy like some tech company, right? While in the meantime, you do get that passive income in the form of dividends, which is amazing. And you mentioned some really good companies here. I'm still, my last share left is Pfizer, so the dividend is really attractive. It's just a question ultimately, as I said, and that's why I kind of said bye to the dividend shares. In terms of total returns, you need to look at that, because as nice as it is to get dividends, if the overall share price drops more than the dividend pays me, then of course it doesn't make financial sense. But of course, I think you asked me before on Stellantis. I mean, when I looked at it, actually they performed really well on total returns actually compared to S&P 500. So there are certainly companies that can outperform the S&P 500 while paying you a nice dividend. And I think it's good to have some exposure to some of those, right? So, I'm never a fan of saying only invest into one single thing. That's why I still have, 3 different investments: real estate, Bitcoin, and S&P 500. But for some of you, you may not like real estate. That's totally fine. You may not like cryptocurrency. Totally fine. So in your case, maybe you have 2 ETFs, right? One S&P 500, one all-world ETF to have global diversification. Because a lot of people say, well, Kai, you only invest in America. What happens if they drop and the rest of the world shines? Well, again, in my humble opinion, I don't see such a scenario. And I think today just confirms that, because we've seen the US drop, and that equivalently, we've seen that across the world, like pretty much most markets that we looked at the beginning of the show, all of them dropped. So I don't see a scenario where only the US drops and everybody else does well. But if you feel that way, you might want to add a global ETF as well. And then you can have a couple of strong individual dividend companies in there, just to get that passive income and the stability. So absolutely, I'm with you on that. I think dividends have still a strong appeal to many investors, and there's nothing wrong with having a couple of them. And Sankit, I'm new and thinking to start investing in crypto ETF stocks. Can you suggest any paid websites for stock tips or expert suggestions? Well, my first question is, Sankit, if you're new to it, I'm not sure why you're asking for paid sites, right? Because to be perfectly honest, I think especially in the beginning, just soak up knowledge as much as possible, right? Because it doesn't mean because it's paid, they are better. Now, there are great options out there, don't get me wrong. For example, Seeking Alpha, it's the website I use myself. I pay for it myself. It's an amazing resource. But just following that doesn't make me outperform the market. And I think there's so much great content out there. And, you really build your own library through listening to some amazing podcasts, read some amazing books, listen to some great YouTube people. For example, Smart Money with Kai, right? But I mean, there's amazing channels that I follow myself, that I get my information from in terms of crypto. There are way smarter people out there than I will ever be. And I learn from those guys, right? And all of those things together, I build my own sort of reality of what's happening in the world and in the markets. And I think the same I would recommend to you. Don't just go out there and pay for knowledge. I think a lot of it is already available free of charge out there. I shared with you today the articles. All of them were free, right? I didn't pay for any of them. So I think don't get hung up to go with paid groups. You can later on add it to your arsenal of tools and websites, but I wouldn't start paying for them. I think there are definitely great options out there. I also have, I think down in the description below on my website, a recommendation of books that I read that I can really recommend on the topic of money and investing. They cost a little bit to buy. I mean, that is through Amazon, it's not for me, but I think you don't have to right away pay for any of those. And we have Jangir, I hope I pronounced it correctly, how to invest into economy of a country. Well, good question. There's different ways, right? I mean, I think the easiest way is probably to invest into an index of a country, right? For example, if you want to invest into German market, for example, you would invest into the DAX, which is the 40 strongest company by market capitalization in Germany, right? Or into France, for example, there's the CAC 40, the CAC 40, the 40 strongest companies in France. And most of the big countries, they have their own sort of index. And based on that index, you can buy an ETF that basically follows them. So same as the S&P 500 that I invest in, which mimics the 500 strongest companies in the US, you can do the same in any country. You could, of course, also buy bonds of that country, but I think that's probably a more conservative way. I'm not really investing into bonds myself. So I think, buying the index reflecting the strongest companies of a country, that's probably the best bet to participate from a specific country if you wanted to. Is the Japanese Dinesh asking, is the Japanese yen the reason for the market crash? Well, I alluded to it previously when I showed the chart. It's definitely one of the reasons, but not the only one, right? So as I said, I don't think there's one single reason. We had last Friday the underperformance of the new job creation in the US. That was one. We had the slightly well, I don't know if it's expected or unexpected, but there was the wish for rate cuts from the Fed, which didn't happen. That was announced last week. So that was pushed back to potentially August or September. Then, of course, the Japanese situation. We had Warren Buffett selling half of his shares in Apple. So I think a lot of factors coming together. Plus, of course, let's forget the situation between Israel and Iran, which is still, I think there might be something happening. Hopefully not, but I think there might be potentially some looming trouble in the region. So I think a lot of factors coming together that obviously resulted in the situation where we are today. But all of those, I don't think are really game changers fundamentally, starting the recession or kicking it off. I think these are subtle things that came together and repriced the markets, but I don't see this as the kickoff of a major recession. Do you think it's a good time to buy more Bitcoin? Well, personally, I did it myself. And yes, if you ask me, absolutely. It was probably a better time even 6-7 hours ago when it hit at some stage, I think $50K per Bitcoin. But even now, I think it's still significantly better than at the highest point when we had 70K, right? So even if you buy it now at 55 to 70, that's already a very positive delta if it goes back to the previous all-time high that you can pocket and make money with. So absolutely, if you believe in it long-term, I think it's a great point. Janice, I think you put the end to this live. Thank you very much. Really appreciate your comment and thank you all for watching. It means a lot. I should probably do these more regularly. Every time I do them, I enjoy that. So I should really try to get more regular with these live streams. And I appreciate all of you for dialing in. It's been late, but I thought maybe it would be bringing a bit of comfort for you guys. I got a lot of message of people freaking out. What's happening with the markets? Is it all collapsing? And I want you to know, in my humble opinion, I don't think it is. I think it's just a natural repricing of the markets that has happened forever, basically. We've seen this in pretty much all the various companies, S&P 500, crypto prices. There's always cycles going through, and this is just a normal repricing of the market. So once again, guys, appreciate you for dialing in. Wish you a beautiful evening, and hopefully tomorrow we see a bit more green in the markets. With this, wish you all a beautiful evening, and I'll speak to you very soon. Ciao, ciao.